Let's turn to a chart first. Look at the S&P 500 year to date. Here's an interesting thing about year to date numbers for the S&P 500. It kind of snuck up on us. As of yesterday's rally at the close, the total return for the S&P 500 nosed above 10% for the year. You see how it looked very precarious in there in February. Of course, also back in the spring and April, we thought it was going to be a bit of a failed recovery attempt. Didn't happen. So a lot of things working in the market's favor, not just the earnings, and the buybacks and the very good moderate rate of growth for the overall year. But also, I think you have this sense here, Treasury yields have remained lower than you might have expected otherwise. So here's a few points. Starting in the past 2 days after this nice action, to hear the melt-up phrase thrown around, I think it's way premature. Melt-up is what you saw from, the last couple of months of 2017 and through January, where it was relentlessly up. The market's not even really all that stretched to the upside yet, not really all that overbought to where you'd have to say. But could it be the beginning of a melt-up? It could be, but what's interesting is you didn't really have a lot of people at the front end of that melt-up last year talking about it. So I think there's a little bit of jumping ahead of the story a bit. The dollar Dow seesaw is a pattern. So the dollar came down yesterday around 10 o'clock. That's when the market got a lift. I don't think that's going to be the rule forever, but right now it seems like a lower dollar says two things. One, we're not going to get some kind of crazy trade disruption, but also the Fed's not going to necessarily be over-aggressive. And right now that's been the pattern. I don't think it's all about trade. Personally, I think trade has been mostly served this year to create the wall of worry and to give you something to be concerned about and to mute sentiment. And obviously, yes, a resolution is better than no resolution. Right. But I don't think it's the make or break issue for this market. Melt-ups end badly. That's the thing. It sounds good because it's melting up, but you know what's on the other side of the melt-up. And that's it's like it's unwarranted or it's out of hand or it's too stretched on one side. Or the pendulum has gone too far. The momentum has gotten overheated. So it's good that there's no melt-up, although it's fun while it lasts. I think not yet. I mean, obviously, it remains to be seen. Fourth quarter, who knows what happens.